Good morning. It's Monday, November 24th, 2008 at about 2 a.m. in the morning Eastern Standard Time. I'm Sean Butler, and you're watching Vlepo. The web address, as always, is vlepo.wordpress.com. That's vlepo.wordpress.com. I'm going to share with you my thoughts on what's been going on this past weekend in the capital markets, both here in the United States and abroad, and of course, as always, my views going ahead into Monday's session and into the week ahead. I think we have to start in Washington, but the news that came out late Sunday evening has to have those at the helms of U.S. financial institutions breathing a large sigh of relief, especially Citigroup, the direct beneficiaries of the announcement late Sunday that the federal government plans to invest more than $20 billion directly into the company, in addition to guaranteeing more than about $306 billion in total of assets. This is huge. If you look at Citigroup's market cap right now, it's hovering at just around $20 billion. So obviously a cash infusion of $20 billion additional dollars is going to go a long way. Citigroup has been just falling out of control. It's lost more than 85% this year. The stock stabilized somewhat midweek last week when Prince Al-Walid bin Talal of Saudi Arabia, one of Citigroup's largest shareholders, raised his stake from around 4% up to 5% of the total company, but then quickly fell back into free fall, and it lost 19, nearing 20% on Monday before the close. This move, I mean, I have to think, I know it's going to stabilize the company. We're going to see instantly the shares shoot back up in pre-market trading on Monday, continuing throughout the session. It's just a lock that this stock finishes up for the day, for the week. I mean, this is huge. It reinforces Vikram Pandit's hand. He said on the 21st last week that he had no plans to break up the company. He wasn't going to break it up, and now it looks like he's not going to have to. They really didn't want to break off Smith Barney. Now, you know, like I said, they're not going to have to. This is good for everybody. This is good in the financial industry, at least. The government's going to get $27 billion worth of preferred shares for their direct investment of $20 billion, plus their huge guarantee of $306 billion on this. It's, you know, cheap for Citigroup. They couldn't get that money pretty much in any other way that I can think of. It's going to really stabilize the financial industry in general, now that we know, or investors know, executives know, that the federal government is really committed to keeping this industry afloat in the United States. They're not going to let big banks like Citigroup fall, and as a result, we're going to see strength across the financials, barring individual bad news this week and Monday and Tuesday. The fact that it's a short week is actually good, because it means that this news is going to be able to last throughout the week, and we're not going to have to worry about, you know, something bad offsetting it as we move ahead. On that same note, I don't know if we file this under lame duck president, lack of communication, or just freewheeling Treasury Secretary, but an interesting report, in my opinion at least, filed 4:56 p.m. on Sunday came from Air Force One, where White House spokeswoman Dana Perino said she knew of no talks going on between Citigroup and the federal government for financial aid. This is not such a great sign. It shows that the president really isn't involved in all of this, but apparently that doesn't seem to matter, because we've seen injections totaling nearly $50 billion in Citigroup from the Treasury Department, you know, just in the past couple weeks. They seem to be getting the job done, with or without the president. Whatever. Looking ahead towards the week, we've got some pretty interesting, pretty useful economic news coming out. Monday at about 10 a.m. we're going to have the release of existing home sales, which should be good, because not only is it a good indicator for the housing industry, but it shows general economic sentiment, in my opinion, as well. Then looking ahead to Tuesday, consumer confidence moving into the holiday season is going to be announced. That's obviously huge. Also at 10 a.m., I don't think you can have good predictions for any of these indicators, but you know, you can always hope for the best. Jobless claims and consumer sentiment come out on Wednesday, so it'll be interesting. We've got some interesting things, interestingly enough, coming up. We'll see what happens. Finally, for anyone who cares, it was really quite a volatile week for me on updown.com, and I think I learned a lot in my stock simulator. But as you know, as you can see from below what I've been posting, I'm a fan of these leveraged ETFs, and with the recent launch of the 300%, the 3 times levered ETFs, I've been going a little bit crazy. I realized why that's not a good idea this week, and in summation, that's because on Thursday I lost about 20% of my total portfolio, only to gain about 17% on Friday. That's really unacceptable when I think about it. There's just no way you can justify that, and it really makes me second guess having 3 times ETFs out on the market. I mean, it's good for someone who's going to responsibly construct a portfolio and use it as a hedging tool, but for someone who's going to use it really idiotically, like I've been, it's just going to be a bomb, and it could really spell disaster. That's not to say they should get rid of them. I mean, I'm all for someone releasing a 50 times ETF, just kidding, but it really needs to be used with caution. Anyway, it's getting late, and I've got work to do, and as you can see, I'm a little bit tired. So I'll post, give a little update below on how I've been doing, and I'll talk to you soon. Wish me luck.